Hi, this is the Tokenomist. I'm a former stockbroker from the City of London, and I'm here to talk to you about the fundamentals or the cryptomentals of the projects you love and warn you about the ones that you probably shouldn't. Simply put, is that coin really worth it? So let's talk cryptomentals and find out what we're going to be looking at this episode.
This is the Tokenomist.
Hi, in this video I'm going to go through a PDF that I put together that shows some of the key principles of how you can value a growth stock and how you can apply it to cryptocurrency. However, and I've just made this thing after the video, is I realised my head's in the way of a great deal of the actual presentation. So what I've done is in the description below, I put a link to the PDF so you can download that and you can see exactly what my face was obscuring. I just went through it the whole time and I didn't really want to have to do it again. So check out the video, hope you enjoy it. If you do enjoy it, please hit the subscribe button. And if you want that download, it's in the link in the description below. It's a PDF, it's a free hosted PDF. There's no give me your email address, just simply hit the link. You can open it up and you can listen to my voice if that's what you like, and you can actually read what was in the PDF. Let's get on with the video. Yeah, we're all George. Oh hi, it's the Tokenomist TV. I'm going to give you something today that you can put in your arsenal to help you value a cryptocurrency, or as I like to call them, a crypto project, as most of them are. Essentially, little startup companies, projects, they're decentralized autonomous organizations, but without waffling into that, I want to talk to you about a growth investment strategy that was written into a book many, many years ago by a famous investor called William O'Neill, who's parted with us from his mortal coil now. And he came up with an approach called the CAN SLIM strategy. And I'm going to show it for you today. And I think we can apply most of these principles when it comes to looking at whether or not a cryptocurrency or crypto project is investable. And I say investable, that's different to whether or not it's a great project. There are many great projects out there, but what they haven't been built with is investability in mind. There's an awful lot of projects out there where the tokenomics are a bit woolly and they really don't require you buying a token. They could just be a piece of software like the Arbitrum Layer 2 protocol enhancement for Ethereum that could just be gifted to humanity as opposed to tokenized and created into a business. So where we are living in a world right now where it takes one obscure tweet from a multi-billionaire to send the markets in free fall, I thought you might draw a bit of solace in these principles. If you haven't come across them before, I'm going to go through them with you to help you understand if the things that you've got in your portfolio make sense long term. And then when you do understand if they make sense long term, you probably can sleep a little bit easier. So let's take a look at what I put together, which is an appalling PowerPoint presentation or a Canva presentation, and I'm going to skim through that now. So everyone from Britain actually has these given to them at birth, which is basically a Union flag mug. You might call it Union Jack. We'll call it Union. Union Jack means it could only be. Start again. A Union Jack is a Union flag on a naval ship. See, it's more than just investment strategy book reviews I can talk about. Talk about mugs as well. I've actually got two splendid cups here, and buoyed by my 9 subscribers and the positive feedback I've had from 7 people from my last videos, I thought you might appreciate this. Again, for those of you, this is the first video you've watched where I'm talking about how to fundamentally value crypto projects in general. My background is I'm a former stockbroker, so I'm not here to give you financial advice. I was a qualified financial advisor or equity broker actually, so I'd give people advice on blue chips, growth stocks. I would spend a fair bit of time learning all about the market myself and understanding what kind of things I'd look for in a growth company. And when you buy any stock, and I'm going to talk about stocks very briefly here. When you buy any stock or or you make any private equity investment, what you're essentially looking at is you are making a spec. If it's early doors, like if it's a startup, real early doors, you're making a speculative bet that at some stage in the future that business is going to be significantly revenue generating, or it's going to come up with some amazing equation because that's what we all look to invest in, equations. I'll find a massive simultaneous equation. You're making a speculative bet, I suppose, on a company currently with some amazing proprietary technology that maybe they royalty out or license out or sell out. So for example, for those people who made early stage bet in Theranos, which was the fraudulent Silicon Valley blood pricking device software, people were making a bet either it was going to be hugely cash generative or it was going to come up with this piece of equipment that was so good that the big big pharmaceutical companies would have bought them out just to stifle them. So there's a number of different ways, but at the core raison d'etre is why would someone buy that technology out? Well, they buy it out because at some stage it can produce revenue. So it all comes down to this core thing that we're looking at being able to create revenue. And that really should go to the heart of any investable approach. So when you are looking at any project, whether it's stocks or whatever it is, does it produce revenue or can it produce revenue? Now, people like Warren Buffett always get a bad name in the tech circles because they go, oh, he missed out on billions. Well, he just didn't invest in tech companies because tech companies don't fit within his investment ethos, or his criteria, or his strategy of how he values companies. It doesn't mean he doesn't agree that they have value and that you can make money on them. He has a model that works for his investors and what he's got to safeguard, and businesses either fit within it or they don't. And there are many businesses that don't fit within it. It doesn't mean he thinks they're a bad business. It just means it doesn't work within his known, circle of comfort. His will, that's in my will, right? What's that phrase? It's in my wheelhouse. Wheelhouse, that's it. It's not, it just doesn't fit within his wheelhouse. He has a system that he applies, which is a value investing approach. So similar to, if you see my video on SushiSwap's P ratio or tokenomics of that, I talk very much about value-based investment models. So looking at how much revenue it generates compared to its valuation now. That's the kind of thing he looks at. He looks at whether or not something is fundamentally undervalued or cheap, essentially, relative to the quality of what it is and the industry in general. If you have a stock that has price to earnings it can be, there's loads of reasons why P isn't always good, but let's just say it is good. If you have a price to earnings ratio of 20 in the industry, that means it takes 20 years to buy back the shares, so you get 5% yield. If you have a good company that has a price to earnings ratio of 3, just because really big negative market sentiment, then that might be considered to be undervalued. Now, that's exceptions are all in there as well. That's the value investment model. The other investment model is growth investment model, and the growth investment model looks at investing in growing companies. So you will hear the phrase right now of buy the dip, whereas the growth investment strategy actually says buy in an ascending pathway, buy upwards. Why? Because if something's going upwards, it's more likely to continue going upwards than it is to continue going downwards. Obviously, cryptocurrency is a different world, but we're going to talk about that. That's called market direction. That forms part of the M of CanSlim. So this is the growth investment model, and I've tacked on plus because I think there's a couple of things that we can consider as well when we come to deciding whether or not we want to put our hard-earned cash into a project. So this is the CanSlim. Let's take a little look at this, what I've done. Boom. So that's the book. If you're interested in reading it, I think you really can apply these principles. It's by William O'Neill, How to Make Money in Stocks. This guy has a good idea. I read it years ago, actually. I was just looking at different ways to approach investment and also to do my own personal investments. When you're managing other people's money or you're working in a broking environment, it becomes part of your thing, and you have different ideas that you look at to find things. So it gives you some good grounding. I think it's pretty good. And yeah, if you so you can really low quality image, but Investors Business Daily is an online magazine that I think is kind of good. I've looked at it every so often. There's a few different websites to look at for financial news, and this is pretty good. So that guy had the idea of CanSlim, and he kind of doesn't really believe in the value investment approach. He believes in the growth investment approach. And this is what the CanSlim words make up. It stands for C, so current earnings. So what they're looking for are current earnings going up by 25% this quarter compared to a previous quarter. Is there substantial growth happening even just this year? Is it going on an upward trend? Are we going to see really good figures? And I'll explain in a second how these can all be applied to what we're looking at. A is annual earnings. Is there a consistent track of annual earnings growth? Again, he looks for 25% plus every year on year. N, new product. So if it's, for example, can't think of a company right now. Disney. Disney's a great one. Disney's seen its share price grow massively over the last year or so because they're bringing out the streaming service, and the streaming service is becoming a bona fide contender against Netflix. So you'd say new product, company's not stagnant, there's a chance for it to continue to grow. Supply and demand, that's the share volume. So is it tradable? Is there volume? And we can apply the same definitely to cryptocurrency. Is there volume in the stock? Is there tightly held coins or tokens? L, is it a leader or a laggard? So Is it the best in the sector, or is it the worst in the sector, or is it somewhere in between? I stands for institutional investment, so I'll apply this now. Does a project that you're looking at have big names investing in it? And M is market direction. You can buy the dips by all means, and I think it's really important. Again, without telling people how to invest their money, I think it's always a bit of a punt if you just guess a price. If you go, right, this is the price I'm going to buy, and you hope that's a good price and it goes up. Certainly if you're trading, it's bad. And this is not for people who want to trade. If you want to trade and you've got short-term time horizons, then you may as well just turn off this video and go and watch a Moon Boy, because it's just nonsense. If your investment, it's about being longer. But market direction is, in this particular approach, was all about buying into ascendancy. Is it growing? Is it going up? Is it an upward curve? If the general trend over, and very often when we look at cryptocurrency, you see these videos. I joke, I like George Cryptos R Us. You see a lot of the videos they talk about with their charts. They're always looking at the last 15 minutes, the 4 hour, the 1 hour, and yeah, that's fine in the near term. But if I believe something has the potential to be a one-sided bet, I said in a previous video, asymmetrical. If I believe it's going to be a one-sided bet, £1,000 now, $1,000 or 1,000 rupiah could become 10,000. That's a one-sided bet. A lot of people would say Ethereum is potentially a one-sided bet, or Bitcoin maybe, or any of them, or Cardano. What the price is now could be radically different in 10 years' time. And most people want things now. Most people over anticipate what they're going to get in the near term and massively under anticipate what they can get with time. So very often people will buy a product or buy a share or buy a coin, and nothing's happened for a few months, so they sell it. And then it rockets. Had they waited, had they used the time value, time is money. When you own something outright, you have the value of being able to know that it doesn't matter if it goes up or down. But anyway, that is what CAN-SLIM stands for. I believe as well, there is a plus element to all this, and I think sentiment is very important. I think, what is the social buzz? So let me just see if I've added anything else to this. Right, okay. Let's go on to this. So let's talk about this. What is CAN-SLIM? So how can that apply to cryptocurrency? So when you are looking at a project, I would say, are we seeing the earnings or the annualized revenue of that particular project increase quarter on quarter? So this quarter to the next quarter. And the way you can look at that is you can use things like Token Terminal. You can use things like Dune Analytics, D-U-N-E Analytics. You can look at Staking Index, I think it's called, or Staking Index. You can find these figures pretty widely online. Now, this means there are certain projects that aren't going to have these things, or aren't going to be in a field that allow you to find this data. That doesn't mean it's a bad project. That doesn't mean it doesn't have the opportunity to make you money, but it does mean you can't necessarily use this metric. And all I'm trying to do here is give you the tools to improve the odds. Doesn't guarantee anything, nothing's guaranteed. This is just at all. If you had no other metrics to measure, but you had one project you were looking at that told you that for the last quarter and the previous quarter and this quarter, there has been a 25% and a 25% each quarter growth in the amount of revenue or amount of trading volume that's going through the particular DEX or index, and therefore how much earnings it's making. If you are seeing ascending earnings growth, that's quite a positive thing for a business. It means there's more traction. The network effect is growing, and that's pretty important. Annual earnings, if we're looking over a longer period of time, are we seeing consistent growth of earnings for the platform? Again, these and I'm not talking about volume of the coins. Okay, I'm not talking about, if you're looking at something like Chainlink. Someone's asked me to do a Chainlink video, so I happen to own Chainlink because it's kind of fits with some of these criteria that I look at, and I'll do a video on that separately. But Chainlink, for example, has got a track record. You can look over it. You can see its network is growing. More people are signing on to it. More trade is happening. Therefore, it's generating more earnings. But some people might confuse that with how many coins are being traded on a day-to-day basis. No, and there is an element that part of that does have an effect. But you can generally find specifically the earnings of the actual platform. That's what you want to find. How much business it's managing. We found it for SushiSwap very easy. You can find it for Uniswap. You can find it for all of these places. DeFi Pulse will tell you a lot of this stuff as well. So there's plenty of resources out there. Next up is new product. Is there something inherently exciting about this. Now, this won't work for every single thing, but let's just take a look, for example, of SushiSwap. Now, I've done a video on SushiSwap. SushiSwap is trying to move into DeFi because I think they probably realise behind the business, or the DAO, that there is only so long that being a DEX is going to be a great business model. Right now we're using DEXs. Why are we using DEXs? We want to buy the next best thing. I want to get those coins because they've got a good yield. But there is a limited use of that. That is not the killer app that's going to make cryptocurrencies go crazy. A lot of speculation is happening. So what SushiSwap are trying to do is trying to find new products. So now they're moving into DeFi as a service, as opposed to just being part of the DeFi ecosystem. They're trying to offer DeFi as a service. And I think you'll see that as what you would call a new product. Another good example of this is Coinbase. Coinbase is trying to move into being a broader hardware wallet. Square wants to be a hardware wallet. Jack Dorsey's just announced at the Bitcoin conference they want to produce a hardware wallet. So new products open up new opportunities to generate more revenues. Sometimes it's a whole new market. Sometimes it's an obvious cross-sell. My main business is I have a vaping retailer. I managed to get vape.btc as well, so that's quite cool. But if I just sold the hardware and not the liquids, suddenly sourcing the liquids would double my revenue, would triple my revenue. It would open up a lot of opportunities. So that's the value of a new product. Are there new things coming online? So we talk about layer 1 protocols, the likes of Cardano, the likes of Internet Computer, Bitcoin, things like that. Have they got things down the line that's going to help grow that platform and find the killer app? I personally believe that not enough people care globally of decentralization as a philosophy to render normal internet redundant. Otherwise, we would have already gone to decentralized social media because of the Parler issue, because we were all offended by it, even if you didn't like the political views being spouted on it. It needs to be someone creates an app that is amazing and just happens to be on a decentralized network. And maybe it could only work because it was a decentralized network, but none of us have been able to open our brain yet to see what that is. We look at a good example is things like Spotify right now gets most of the business when it comes to streaming for music, and there are crypto projects out there that provide a streaming music service that gives more money to the artists. But we still look at the artists as millionaires compared to fighting against billionaires. We don't care enough, otherwise we'd have already ditched Spotify. So there needs to be that thing, and it hasn't happened yet. But so new products are interesting, and it can mean the growth of a layer 1 protocol, or it could be the growth of a layer 2 project. So that's that, or a dApp, sorry. Next up is supply and demand. Is there interest in the coin? There's plenty of coins that, I suppose essentially, if people aren't buying the coin or aren't aware of it, it can never move. My wife always says, many a good business idea with bad marketing, struggles against a terrible business with great marketing, and it happens all the time. How many terrible products with great marketing do really well? How many of you have got a really good product, you're just not very good with the marketing and it struggles? So supply and demand is really important for anything, for traction. The more liquidity there is out there, it's important. The ability to I think a really good example actually is Cardano. 70% of Cardano is locked up, so it's there's a huge amount of demand for Cardano coins. People are happy to have it, happy to hold it. That has a really big positive on the price. It holds the price at good support levels, and it gives more people confidence to buy in as well. And the more people who own that token, demand that token, the more they have a network effect. Hey mate, what coins do you got? Oh, I've got Cardano, I've got Chainlink, I've got Graph. Oh, okay. Tell me about Chainlink. Okay, well it's the oracle of the network. It's the only thing out there that does it that way as well as it does. Oh god, that sounds good. I like it because it's a hedge. And obviously, I have an opinion on this, but don't. I mean, that's just me just giving you an analogy. But I'm telling my friends, and then maybe a friend of mine's got ABC coin, which doesn't exist, and he tells me how great it is. I now hear about it, and now maybe there's 100 people who've got it telling 100 people. So supply and demand has a really big effect on the growth of a share price, or supporting the fall of a share price. Next up, after my British coffee, I haven't even started this one yet. I haven't got any milk in this one. Let's go for 2 at once. You know what I say about a man with a big coffee? Goes through coffee a lot. 2 different types of coffee. This is ridiculous. Next up, Leader. See how many coffee cups I go for. I've got another one here as well. This was the Big D. So leader. Is it a leader or is it a laggard? Now, a good example, and I'm going to use this as an example, and it doesn't mean go out and buy it because that's not what I'm talking about. I'm just going to use an example. Chainlink is the leader of the oracles. Okay, it's the biggest oracle supplier out there. It's already got deals with Google. I'm sure it's already started to get embedded with some of the government agencies who are doing their research. That's speculation. There is a lot of push from the government administration in America to investigate on-chain transactions. Chainlink are probably the middle point of that. They are, they're dominating. They're already dominating, and they're what you call a medium size or a mid cap or whatever you want to call them. They're a big project. They are, $20-25 billion at the best of times. They are, my cat's struggling to get out the kitchen door. This is ridiculous. All you can hear now is a scratching sound. They're dominant, and the chances are they're going to continue to grow. Look at Google. If you try and open up a search engine right now, how hard is it going to be for you to sort of compete? They've already got, you're overcoming so much inertia. Chainlink are dominating, and because they're dominating, it's more likely they're going to attract the investment. They're going to attract institutional investment, because people will trust them as a go-to player. It's more likely that if you've got, so let's say for example you've got international hedge fund company. They go, okay, we don't just want to buy Ethereum and Bitcoin. What else are we going to speculate into? What else has got growth? They're going to hear about these mid caps, and they're going to be still risky for them, and certainly within their wheelhouse of appetite of growth. But they're going to more likely put their money in something like Chainlink than they are, Barry's new chain oracle system limited. They're going to go for this. So if you are the leader, you are naturally going to have the bigger things gravitate around you. It's easier to do deals if you're the leader with a market leader. Deal with us. So that's why it's important. Is the project you're looking at, is it a leader or is it a pretender? And let me explain this in a way that's also quite easy to understand as well. Part of my business is what I do when I'm not running my own e-commerce businesses. I provide organic marketing advice, UX and stuff for e-commerce businesses. And people will present me a lot of ideas, and I turn down a lot of work because I don't want to provide, I'm not passionate about a project that I know can't work. And if someone presents an idea to me that is essentially a Me Too business, that means there is nothing different about that business other than the fact that they do it. What's different about your business? Well, it's not, but if these people can do it, then it's easy enough for them, then I can do it. No, not good enough reason. I'm not going to leave who I buy my things from simply because you have a business. I don't owe you a living, and I will turn that work down. So it's very important that when you look at businesses, is it a leader? Is it dominating? Has it got the potential to keep growing? Now, some people might go, do you know what? I want the one that could be the next leader, the one that's going to eat their breakfast or eat their dinner. And that's cool. That's fair enough. And you can look at other metrics. That's going to be more speculative. You may not be able to use this model, but there'll be plenty of things that you can use this model for to help you find great projects. But I tend to go for, is it a leader? Institutional investments. With institutional investments, it's hot over there, or blue there, just to make it look a bit more engaging. Just wake up, guys. Institutional investments, that means, are people putting their money in? So this is what I want you to do. I thought about doing this the other day. I was up late on CoinList trying to do the Vega IDO, and I saw some Twitter that said, look, if you haven't looked at this yet and you're looking at Vega, read this first. Anyway, I read this article. It put me right off getting involved in Vega, and it was partly because of the markup of the price from where it was only a few months before, with no real mainnet yet. But what I do look at, that's why I thought I'd do this as well. When I look at a project, I look at who their partners are, who actually bought into their project. But more importantly, for what you're doing, when what we're all doing with crypto, what did they get in return for their money? Now, there's something you've got to be mindful here. If they got tokens and not too dissimilar price to what you got them for, that's great. So a good example, Polkadot. There was a lot of institutional investment in Polkadot at $21 in the 21 funds or the 11 funds. It's a Swiss-based fund. I think it was Morgan Stanley or Merrill Lynch. One of those put a bunch of money into a fund behind Polkadot at $21. That to me is great. They bought a fund that bought the dots. Okay, so they bought the dots. So that means that's an investment to them. They've obviously paid good money for that, and they bought the same thing that I can buy. And they bought it at $21. That lets me know, okay, well, that's the price the big boys got involved at, and they got the same thing I did. Now, you might look at something like, and I use this as an example again, and it does concern me, like Ripple. Ripple are going to do an IPO, and they're going to get institutional investment into Ripple. And those people are going to get shares in Ripple, not XRP tokens. So what's the fundamental valuation behind an XRP token? I don't know. And that's because I don't know enough about XRP. But it's just something that flags me up, and I go, hey, do you know what? Before I buy XRP, I need to look at this. That's all, so I'm not trying to bag on them. It's just a very easy example to pull out. I think there are probably a few more. Binance talked about doing a flotation as well, and it makes you think, well, what's the point of having the Binance coin? I've got the Binance coin, okay, but what's the point if they're gonna give the money there? So there are different reasons for Binance coin, but I mean, it's just something to think about. So who's buying into them? Now, there's something to be mindful about this as well, and you need to not have what's called cognitive dissonance. You don't want to lie to yourself, okay? I think this is where a lot of people come unstuck. Some companies like Coinbase Ventures, for example, or ICP, or big organizations, or Gemini, will invest in layer 2 projects or dApps. They will invest in things to create an ecosystem. So you look at Cardano, for example. Say you were a big investor in Cardano. You might put a shed ton of money behind Cardano, but you may also make some investments in projects that live within the Cardano ecosystem. But actually, and someone might go, hey, look, Coinbase Ventures put money in this project on Cardano. Oh, I'm really bullish about it. Okay, just take a step back. Is it possible that they made grants as opposed to investments? Kind of, that's the mentality, into the dApps in the ecosystem to strengthen the layer 1 protocol. And I think that's something that's not been talked about, and I think that's something that's definitely happening. I think there's been so much growth on some of these companies and these institutions' investments in layer 1 protocols. They've grown massively. There is the money there to speculate in layer 2 and dApps and solutions that they don't ever expect to get their money back on, or even have the tokenomics in the tokens for that to happen. They just want the layer 1 to get traction. So just think about that. What type of investment has been made? At what price? Have they made any other investments within that ecosystem and around it? Or could it be that these just underpin a bigger one? And also, what kind of investors are they? So if it's something like a generic hedge fund, for example, who has just not invested in the layer 1, but just invested in the projects, brilliant, that's great. That's clearly an investment. At what price, and what do they get in return? So things to think about. Are there different classes of tokens on your project? So again, something else to think about. It's a tick list. You go through them all and you go, okay, great, this one's got Coinbase Ventures in it. That's the only thing they've invested in. It's the best project doing what it's doing. There's a really supply and demand. Something else I look at as well, and actually I'm going to go back to supply and demand. Twitter, look at the Twitter followers. Is it the leading Twitter account? Is it posting regularly? Is it constantly getting new signups? Is it the only one doing what it's doing? Has it got new ideas coming out on the market? Is it growing in the numbers of people signing up, or total value locked, for example, quarter on quarter? And then final one is M, which is the stock-based one, is market direction. Buying in an upward trend. I think Alex Becker did a video on this recently about Bitcoin going down, and he said about, buy the dip, when really he says it's sometimes better to buy on the uptrend when the trend is going that way, because you're more likely to get into the right market. Now, with that one, I would say something that I stick to is, if I believe something has the potential to be valued at X price, I don't mind if I buy it at Y plus 10%, Y minus 10%, Y plus 15%, because I'm looking for a lopsided bet. I'm looking for something that goes from here to here. So if it's here, 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 I couldn't give a crap. But market direction is certainly something to think about. Has the market hit a bottom yet? Has it done itself? So it's just something to think about. That's what the CanSlim is, but I want to talk about using some other elements that you can also plug in. It's why I called this the CanSlim Plus. It's my little take on it. So next up, it's 90% of the people in the stock market, professionals and amateurs alike, simply haven't done enough homework. That's a quote from the guy who wrote the book, William O'Neill, the guy behind CanSlim. And what I wanted to highlight was, on that previous slide I just showed you, it's like a PowerPoint presentation. On that previous slide, I talked about market direction, the M, market direction. Now, look at how many videos there are on YouTube right now talking about, you must watch this video in the next 5 minutes because some shit's going to happen. The market's going to go this way. It's all technical analysis. It's all just chartism. Chartism, it's all just chart direction. It's all market direction. That's only one aspect of whether or not you should even buy a project. Are there even tokenomics that make it investable? Is it even returning investors any money? Is that part of the whole ethos? Have they sat there and gone, right, we're going to sell tokens, right? But we need to make sure people who buy tokens, if they have to hold them for 10 years, they're going to earn something. Oh, it's a good idea. I hadn't even thought about that. And how many of them are doing that? They're not. There's so many tokens that are just governance. And yeah, you could governance yourself into creating a revenue, aspect to the business. But if the DAO's been set up, I say DAO, the decentralized autonomous organization, if it's been set up not thinking about tokenomics or economics or investability economics, a lot of people talk about tokenomics and they just talk about how many tokens are issued. That's not economics. That's just how many tokens have been issued. It's like the smallest part of it. It's the least relevant. I don't care how many have been issued. I care about, I can find that out by looking at CoinMarketCap. I care about whether or not it can give me anything back. What's the point of me putting my hard earned down? So if you're just looking at the M for market direction in the CanSlim approach, which is what most people are doing online, then you are fitting within this quote that William O'Neill wrote years and years ago. 90% of the people in the market, professionals and amateurs alike, haven't done enough homework. And if you have just only been looking at the TA, you've only been looking at whether or not you like the feeling of something and you sold yourself on it, then you aren't doing enough homework. Right, so what is the plus? Good, right, 3 things. Okay, network effect, value metrics, and hodlonomics. I come up with hodlonomics myself. Little teddy bear I put in there. Right, network effect. I've got to remember what I wrote, to be honest. I sat down and did it on my phone. I was like, right, these are things I must say. Network effect, right? So what's the sentiment? And so the network effect is, you'll hear people talk about Metcalfe, like Raoul Pal talk about Metcalfe's law, and it goes into it, and it's kind of cool. Kathy Wood does it as well. But essentially it's, how big is the network? Facebook was valuable before it even made revenue because it had a big network that it could do things with. So that's the network effect, and it grows exponentially. As one person comes onto the network, they have a value, and they reach out to someone else who has a value, but maybe they reach out to 3 people and they've all got value, and 3 and 3 and 3, and it gets massive. So what is the sentiment of the project? Now, how can you track this in a positive way? There is, I think it's called Santiment, which tracks online sentiment about a thing. But you can also look at brand mentions. You can look at a number of SEO tools. I use them in marketing to see whether or not businesses have been mentioned. And you can just see how many column inches there are, how many app downloads. So for example, and I'm going to say this, and again, my partner here, Steve's going to hate me for it. He's a big fan of Audius. Audius is constantly recommended by another fundamental-based YouTube channel. And they go, it scores really highly in our AI and our machine learning. But the problem that Audius doesn't score very highly on is it doesn't score very highly on iTunes app downloads, Android app downloads, and it doesn't score very highly on social media mentions, and it doesn't score very highly in the tweets of Drake, 2 Chainz, any other number of celebrities. You haven't yet got Snoop saying, hey, do you know what I'm going to do? I'm going to take all my music off all the other platforms, and I'm only going to put it on Audius. Justin Bieber doing the same, and Selena Gomez doing the same, and 2 Chainz doing the same, and Drake doing the same, and all of a sudden the biggest artists in the world are on this new platform that favours paying artists more than the publishing houses. And that is what would cause people to move over. Not, oh hi, Spotify only pay us 9p, but this way you're going to pay us 20p. Because people will think they're going to be paying more for their music as well, and their experience is less. So you can talk about fundamentals and it's hit a score on a system, but that's all bollocks if it hasn't actually got the social media mentions, the app downloads, the network effect of real life. So there's fundamentals that we can look at, what's the earnings and all that other nonsense. But then if you don't have the earnings, there is another element you can look at, and that's why I call this the what's the plus, because if you're suddenly seeing an app that's being downloaded exponentially, has huge numbers of downloads, people are talking about it, young people are using it, they don't even care the fact that it's decentralized, they're just using it because it's a great tool, then you have another way of valuing something that you possibly could look at. A great example is a lot of these social media, the decentralized social media apps. I've downloaded one the other day. I don't want to say because I don't want to do a bad name, and I'm no one, but maybe one day I am someone and it does damage to them, and it's not fair. So I downloaded, I've already nailed one. Fuck it, let's do this one. SoMe. So I downloaded SoMe yesterday. It's on the Cardano ecosystem, and they were on BitBoy Crypto's channel, and it's this decentralized Facebook. Great. I mean, people don't really like Facebook so much anyway, but it's still massive. So what does it do? Oh, it's decentralized. Yeah, but I mean, what problem is it solving? Well, if you get censored, okay, well, I'm not Donald Trump, and I'm not, I'm not really a big. Yeah, there are people when censorship's bad, but it doesn't really affect a very small number of people in any way that we can control it. The other way to control it is obviously governments can control it, and that's a very big thing. But whether or not this app could even reach there, because they can cut the internet off, and they often having intranets. Now, decentralized means they can bypass that, I think, but I think you need more than that. You need more than just being the decentralized Facebook, the decentralized Twitter, because I can make one as well. What's the difference between my decentralized Facebook, your decentralized Facebook, and someone else's? Oh, we were first, and ours is a bit better. Okay, a bit better. How much better? And they do say in order to beat the network effect, you need to be 10x better. Now, I think that's quite a binary or an absolutist phrase, but anyway, it's important, right? So you don't have to have earnings necessarily when it comes to growth valuation of a company, but you can start looking at sentiment, social media buzz. Importantly, does the project you're looking at have more social media followers and engaged social media followers than other similar platforms within the same competing niche? Don't just look at sheer numbers, but are they posting every day? Is there likes, retweets, shares? Is other people following them that's important? How many mentions, how many column inches have they got? Are they going up in the app downloads chart? So there is quite a lot of stuff you can look at. That's the network effect. Next up is value metrics. So, PE, price earnings, is cool and everything, and it's one way to look at it if it's got clear earnings. But it doesn't always tell the whole story. Sometimes it could be that the earnings have fallen harshly. So now the PE is low because, the price has fallen harshly because the earnings haven't grown. That's it. Sorry. So there's, PE is a good metric, but there are flaws even in that. So, let's say it was on a PE of 10, but now the price of the token's fallen because of a risk that another token could come along and beat it. So now it's got a really low PE. Wow, this is really good. But actually, it could be in the descendancy. So look at the value metrics. Very important. Token terminal, June analytics, places to get the information, but it's not the be all and end all. And also, of course, with that, having a look at how much gets shared out. So those things are very important to look at as well. Is there earnings? Is there money being made? The final one in this is hodlnomics. If you've got to hodl, could you do it? And would it be a better safety net than say others? So is there the potential that it's going to grow even in a bear market? Is it a really good DApp that's got a use and people are going to keep using, is going to keep growing, and actually there is a benefit to still hold it? So things to think about. Does it have to tick every single box we've gone through? No, but if you go through all these things and you go, wow, yes, and yes, and yes, and yes, and oh my God, and oh my God, oh my God, and oh my God, yes, then you know what you've got in your portfolio. And you know what, when the price goes down, you haven't got to worry about hit and sell. The whole secret to winning big in the stock market is not to be right all the time, but to lose the least amount possible when you're wrong. And that's kind of what I wanted to do here for you. I wanted to give you some tools. Now, we get very often people online, and they'll go, Bitcoin's rubbish, Doge's the future, Ethereum's rubbish, Cardano's going to kill it, Cardano's Facebook, Ethereum's MySpace. And actually, those people don't realise that it wasn't actually Facebook that killed MySpace. It was MySpace loading full of ads, and actually Facebook couldn't even tackle MySpace for a long period of time. That's just another thing anyway. The point being is it's really important to mitigate your losses, and the best way to do that is to realise there is a chance you might be wrong. So if you love Cardano, I think Cardano's kind of cool, and I like Ethereum. I think Ethereum's kind of cool, and I think Matic is cool, but may not be forever. I think there's lots of cool things out there, but I might be wrong. And the reason why I know I might be wrong is because I probably am wrong. There's going to be billionaires wrong. There's going to be billionaires who've made very, very bad bets. More importantly, there's going to be billionaires who are going to be very wrong, who've made bad bets, and they've been in the space for a decade. And if they're going to be wrong, there's a chance you might be wrong too. And so it's important to take a measured approach to what you invest in. So if you've got $1,000 in Cardano, and Cardano is currently 10 times the market cap for other layer 1 projects, then buy $100 of the other layer 1 project, because by the time that matches to the same value of Cardano, you're not out of pocket at least. You've insured yourself, you've hedged yourself against other things. You may be wrong, Cardano may be terrible, Charles Hoskins may be Elizabeth Holmes, Dominic Williams of DFINITY may be Elizabeth Holmes. All these people may all just turn out to be utter charlatans. We don't know, because we don't know yet where this is going. And I think none of us do. So we're taking speculative guesses, but we've got to understand that we might be wrong. And if we might be wrong, what can we do about it? Well, we can take a look at the projects we've got and ask ourselves if they're investable. And 2, we can go, if not this, what? What do I need to have balance? Over diversifying can mean you end up with very, very little gains, but not diversifying at all means the chances of you hitting a home run on one is very, very slim. So diversifying is a really, really valuable tool. It just says, hey, you know what? I might be wrong. And if I'm wrong, how can I make sure overall I'm right? And I think that's all I've done. That's it. It's my guide. Look, all I'm trying to do is give you some ideas on how you can approach fundamental valuation of cryptocurrencies. Don't take on board anything I've said. Just consider it, if that makes sense. And if you found it useful, please do me a solid. Hit the subscribe button, give us a thumbs up, and ask me if there's any projects you want to do. I am going to be doing SafeMoon. I am going to be doing Chainlink. There's a bunch I'm going to be doing. But all I wanted to do here was give you some ideas of projects that you could, or no, tell a lie, I'm waffling here now, was to give you an idea of ways you can approach investment in crypto projects. And I call them projects because they're not all currencies, but understanding that technical analysis makes up a very, very small component of the whole pie. And if you're not doing all the other stuff first, then you shoot yourself in the foot. Think about Twitter followers, think about column inches, think about new signups, new clients they've got, how many new clients have they announced. Think about I don't know what else. I wrote a list of other things down. Think about what's going on, everyone. Think about app downloads. You can check it out. You can see the list of them. If you hear a great idea of a new project, ask yourself if you definitely use it. Download it, have a go on it. But tokenomics, is money returned to token holders in some format in preference to non-token holders? Are there different classes of tokens? And the other thing I just want to remind again, I've not seen this mentioned anywhere, and it's really important for me to reiterate this, that I for the CanSlim approach, where I said about institutional investments. Is the investment a grant to grow the ecosystem to help the other investment, or is it just a direct investment in that one project within that ecosystem? Okay, I hope I've helped you out. I hope it's given you something to use. This is Tokenomist. Thanks for watching.